Welcome back to the Malaysia Money Matters show. It's Wednesday, June 18th, 2025. Today we're diving deep into the key financial, economic, and political news affecting Malaysia and, well, the wider world.
There's certainly a lot happening. Where should we start?
Let's kick off with Malaysian companies, some big moves in the energy sector.
Absolutely. Shell, for instance, is making a really significant investment commitment, over 9 billion ringgit.
Wow, 9 billion, that's huge. What does that signal?
Well, it points to strong international confidence in the Malaysian economy, definitely. And it's expected to create high-skilled jobs, too, which is always good news.
And Petronas isn't standing still either. Something about a new terminal.
That's right. They've confirmed plans for Malaysia's third regasification terminal,
Okay, and the driver for that?
primarily surging electricity demand,
Yeah.
particularly from all the new data centers popping up. It's about ensuring supply keeps up.
Makes sense.
And they're also partnering up with Eni, the Italian energy giant, a 50-50 joint venture for gas assets here and in Indonesia.
Aiming to boost production, I assume.
Exactly. Enhance regional energy security.
Hmm.
But it's not just fossil fuels.
Ah, right, the green transition.
Yes, Petronas is committing a pretty substantial chunk, 20% of their capital expenditure over the next 5 years, to low-carbon projects.
Aligning with those net zero goals.
Precisely. And that ties into renewables generally. The Asian power grid concept, for example, seems to be gaining real traction.
Maybank sees it as feasible now.
Yeah, and you've got Petronas and Tenaga Nasional exploring renewable energy exports, potentially from Vietnam to here in Singapore. It shows that regional integration piece is moving.
Interesting. And what about solar power specifically?
Well, the feeling is companies that missed out on the large-scale Solar 5 bids might actually be frontrunners next time around.
Oh, really? So more activity coming.
Potentially up to 10 billion ringgit in new contracts. So yes, a lot of potential investment there.
Okay, moving beyond energy for a moment, what else is happening?
We're seeing some diversification efforts. Berjaya Land, for example, is looking at new ventures up in Perlis.
Perlis. What sort of ventures?
Things like rare earth mining, but also large-scale plantations, durian and grass. It's quite a mix, signaling, diversification for the state's economy.
And on the corporate finance front, Yinson Holdings.
Good news for them. They've closed the first U.S. $300 million part of a larger U.S. $1 billion investment from a global consortium.
That should strengthen their balance sheet considerably.
Definitely improves their financial health. But it's not all smooth sailing for everyone.
Oh.
Hin Group had to call off a fairly large acquisition around RM51 million for some data center-related firms.
Why was that?
A key condition wasn't met, basically, securing a substantial enough order book beforehand. It just didn't materialize.
Right. Shows the importance of those clauses.
It does. On a more positive note, though, Malaysia Marine and Heavy Engineering finally won a long-running legal dispute over valves.
Ah, the 6-year one.
That's the one. A final victory, so they avoided a potentially significant financial hit.
Okay. A relief for them, I'm sure. Let's broaden out now to Malaysian economic and policy news. There's a lot of talk about reforms, subsidies.
Yes, the RON95 petrol subsidy rationalization is still being discussed in terms of timing. The finance minister Tusek can confirm that.
But it's still on the cards?
It seems so.
Yeah.
It's seen as a necessary step before Malaysia introduces its planned carbon tax in 2026. You sort of need to fix one before bringing in the other.
And the prime minister is backing these, even if they're unpopular.
He's reiterated the government's commitment, framing them as essential for long-term stability, even if they're short-term pain.
But businesses are pushing back.
Strongly. The Federation of Malaysian Manufacturers and 6 other major associations are really urging the government to delay the expanded sales and service tax.
Especially the tax on commercial rent.
Exactly, that 8% tax. They're worried about inflation, potential job losses,
Yeah.
the ripple effects.
And this SST, maybe alongside electricity tariff hikes, could hit specific sectors?
Yes. It's expected to make the second half of the year tougher for Malaysian REITs, impacting their income. And it'll likely squeeze profit margins for glove makers, too.
Despite these domestic pressures, how's the overall stability looking? Ringgit. Investment.
Well, Bank Negara's deputy governor reaffirmed their commitment to keeping the ringgit stable, especially with global uncertainties like U.S. trade policies. And Malaysia's actually still doing well, attracting foreign direct investment, outperforming, in fact.
That's encouraging. Anything on the social safety net front?
Quite a bit, actually. The EPF is calling for a major overhaul of the retirement system, thinking about longer lifespans, different work patterns.
Adapting to the future of work.
Pretty much. And complementing that, SOSO is planning mandatory contributions for gig economy workers starting likely January 2026.
How would that work?
A small deduction per ride or per delivery. It's about extending that social protection net to a workforce segment that's often quite vulnerable.
Okay, let's shift focus internationally now. Geopolitics still playing a big role.
Definitely. Ongoing Middle East tensions are still weighing on emerging Asian currencies and keeping oil prices, well, elevated.
And we saw that tanker incident near Hormuz recently.
Yes, although it was deemed navigational, not hostile, it really highlighted the risks in that critical shipping lane. Tanker rates actually jumped because of it.
Meanwhile, the long-term oil outlook might be changing China's demand.
That's a big one. The International Energy Agency now thinks China's oil demand will peak earlier than expected, around 2027.
Because of EVs.
Primarily, yes.
Yeah.
The rapid uptake of electric vehicles is the main factor. This adds weight to the forecast of a global oil supply surplus down the line.
Interesting implications there. What about trade tensions, EU and China?
They seem to be widening. The EU apparently refused to hold scheduled economic meetings because they feel there's no progress on key disputes.
Like the rare earth export curbs.
That's one of the major sticking points, yes.
And over in the US, economic signals?
Showing signs of a slowdown. Industrial output and retail sales both dipped in May for the second month running. Consumers seem to be pulling back a bit, maybe due to tariff worries.
And something about US treasuries.
Yeah, reports suggest foreign demand might be showing some cracks, as they put it. Global central banks seem to be diversifying away from dollar assets more actively.
Which could have long-term implications for the dollar's dominance.
It certainly could. And finally, central banks in Asia are making moves this week.
What's the latest?
The Bank of Japan kept rates steady, but signaled a slower pace of pulling back from the bond market from next year, trying to avoid volatility.
And elsewhere.
Bank Indonesia is expected to hold rates, likely focusing on keeping the rupiah stable. But the Philippines Central Bank might actually cut its key policy rate. So different approaches across the region.
A really dynamic picture, from big energy investments here to tricky domestic reforms and these global shifts in trade and energy. It's all interconnected.
Yep.
So as we wrap up, maybe the thought to leave you with is this. We're seeing this push for necessary long-term structural changes, both here and globally, but they often come with short-term costs or discomfort. How much pain is acceptable for that long-term gain? Something to ponder. For more daily insights like these, make sure you subscribe to the Malaysia Money Matters podcast. We'll be back tomorrow.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.